I feel like the amount of money that's going to be made in the micro cap and small cap stocks over the next 5 years or so, it's going to be just epic because the pain has been so great. Like even one money manager killed himself in Toronto. It was in the news. I just feel like it's going to be so massive that it's going to knock people's socks off. But here, we're going to listen to this video. We are reaching an inflection point for Canadian small caps from a portfolio manager, and I'm going to comment on some of the things. So let's go ahead.
So far, the rally in 2023 has been characterized by the big getting bigger and small caps being left in the dust. The TSX Venture is down 7% compared to the TSX Composite, which is up 7%. The Russell in the United States, their measure of small caps, has also lagged the broad market. But our next says this is perhaps at an inflection point, creating some buying opportunities. Dave Barr is the CEO and portfolio manager at Pender Fund Capital Management, where you focus, Dave, on some of these small caps. Just talk about sort of the underperformance that we have seen relative to the big players, and what are the factors that are driving that?
Yeah, we've seen this trend for the last 5 years now, outside of a brief window in late 2020, early 2021. Where a lot of capital has been flowing out of small caps and into large caps. So if you look at global macro flows, as people have been rotating into large caps and mega caps and the FANG stock and everything that's exciting, small caps have really been left behind. So we've been seeing capital leaving that space, which has created probably the largest valuation disconnect we've seen between large cap and small cap since the early 2000s. So kind of 2000.
So think about this. The valuation gap, it hasn't been this big since the early 2000s. So we're talking more than 20 years. It hasn't been more disconnect. And also, he was talking about the money outflows from there. And that's really the cause for what's happening. That's why you see Oracle doing what it's doing. That's why you see Voxtra doing what it's doing. That's why you see Adura not being at $5 yet or $10. That's really why it is. But if you go to Twitter, it's always these individual companies' fault. It's always their fault. It's always my fault. It's never the real fault, right? It's never the real fault. It's always the management did something, or you did something, or I did something.
2002 to 2004. So from a valuation opportunity perspective, we've never seen the odds stack this much in our favor.
Well, and I want to
This is what I'm trying to tell you guys. It's that the money that's going to be made here, when this thing turns, it's going to be just epic. It's going to knock people's socks off. Like, it's going to be crazy.
That point about flows. It seems like trading volumes in these stocks are also starting to dry up. I mean, that's not good for an ecosystem where you're trying to get small caps to become large caps.
No, it's there's not. I mean, if you look at the active management industry, traditionally managers will try and outperform by going down into smaller caps. And with people investors moving to passive, it's just there's been a big hollowing out of active management right across North America. And so the people who traditionally would be investing in small caps just don't have the capital to do so anymore, or they're just not in the space at all. So capital for small caps is very much dried up. So there's not a lot of participants in that space. And it was interesting. I asked the previous guest from Sleep Country if they were going to be acquired, and that's where the source of liquidity comes for small caps right now. A lot of these companies are trading at such attractive valuations. They make very attractive takeover candidates for other participants in the space.
I mean, we've seen so many examples of that, specifically in small cap tech. I mean, are those the kind of opportunities you're screening for, or are you looking to be holders of things that you think are trading at these valuation discounts in hopes that they re-rate at some point?
Yeah, we try to look for more than one catalyst. So when we're looking at a company, a lot of times we'll say, okay, what's this company going to get acquired for? And then buy it at a discount to that. But then also, if the capital flows do come back and the market starts to give a normalized multiple to it, then we will experience the gains from the market as well. And interestingly, Scotia put a report out this morning talking about ETF flows into the Russell 2000 last month. And last month was the highest flows into the Russell 2000 since I believe it was 2016. So as we say this right now, where capital's dried up, we might be on the precipice of capital coming back into this market just because people are seeing this opportunity today.
Okay, so we could be at the precipice of an inflection point if those Russell flows are an indication. So where are you positioned? What's kind of your top idea right now?
The sector that's been hit the hardest over the past couple of years is the tech industry.
Tech industry. Huh. I wonder what industry Voxter is in.
So small cap software companies is where we're laser focused right now. One of our best ideas, Sylogist, as a software company, we look at it. It's a wonderful acquisition opportunity for a private equity firm. If we look at what other private equity firms are paying for comparable companies to Sylogist, it's in the $13 to $15 range right now. Sylogist trades below $8. And after last couple of years, they've been reinvesting in sales and marketing and product development, gone from very minimal organic growth to double-digit organic growth. Profit margins are increasing again. So just wonderful business, free cash flow generator, growing, trading at a big discount to what someone's going to buy them at today.
And I think that's important when you're talking about the fundamentals and revenue growth accelerating. We were talking, I'm trying to remember my days of the week, but I think it was last week, Farmer's Edge, right, came to the market with sort of this big promise as a tech company and then kind of consistently quarter after quarter failed to deliver on that.
Yeah, when you get periods like 2020, 2021, where the IPO windows heat up, the big dreams sell really well. But at the end of the day, in the public markets, you're really measured by your fundamentals. And so digging deeper into where the opportunity set is, when a lot of these IPO companies that IPO'd over the last couple of years, they've been hit really hard. Share prices down 80, 90%. If you can find the companies that have turned cash flow positive, like a Thinkific, or we believe are going to turn cash flow positive, like a Copperleaf, that's where you can find the multi-baggers for the next 3 to 5 years.
Let's talk.
So that's it. So think about this. I totally agree. If you can be in a company that's about to turn cash flow positive, and the other day, Jordan did an interview with Radius Research, and he was talking about how that's why they will reduce the debt to like a single digit or completely reduce the debt, because the debt is really the thing that would turn Voxter into cash flow positive. So that's a good video. I just keep saying the same thing over and over, but now you heard it from somebody else. The disconnect between value and price in the microcap space has never been better in the past 23 years. Yeah, 23 years. So it's your choice. You can run away or you can take advantage of those opportunities. That's all I have to say.